Welcome back to our intermediate financial accounting class. Over the last few segments, we've been talking about cash flows. We spent a bunch of time talking about the conceptual background behind cash flows, why it's important, what the different styles are, what FASB wants us to get out of it, the difference between the simplified version taught earlier in accounting education and the more accurate version that we need to learn to know what companies are really doing. And then we started working on the 8 steps that walk us through an actual version. So far, we've made it through the first 4 steps. We've done a net change in cash as a check figure. We've created worksheets. We've gone through specialized transactions to see what the cash effects are. We've gone through the income statement to pull out non-cash items. And then we started the process up here with current assets of going through the balance sheet to look for cash that hasn't yet been accounted for. Most of what we're looking for is in this cash flow from operations worksheet. The difference between what our accruals say we spent for the period or earned for the period and what we actually paid out or received in cash. And we use those working capital accounts, that's the current assets and current liabilities, to help us make those reconciliations between what we actually spent and what we show as expenses and revenues. In addition to going through the working capital accounts, we're also looking at the long-term assets and the long-term liabilities and the equity accounts just to make sure we didn't miss anything. Because there's no guarantee that when we were preparing for step 3, we didn't accidentally miss a transaction. So we look through and we make sure that there's nothing else going on. So in our last segment, we're able to find 2 different adjustments that need to be taken care of. And we were able to take care of our securities available for sale account and make a note that there's no additional cash. I took care of all the cash flows with available for sale securities as part of step 3. Now we're ready to move into our long-term asset section. And we're not going to find any working capital accounts here, but we are going to have some accounts that we want to just check and make sure we haven't missed anything. And we're going to start with investments in affiliated companies. This is our equity method investment. Let's start again with a T account. We began at 2 million. We ended at 2,121,000. Let's see if we've already accounted for this difference. Investments in affiliated ... It has a really long name. We said it started at 2 million. And it ended at 2,121,000. Our next step, again, is to go back through step 3 and just see if there's anything in this account that we've already looked into. And we're looking for the investment in affiliates account. Let's see, land and building, common stock. I don't see anything on this page. Let me scroll down. Dividends payable over here. I don't see anything there. Oh, there's one. Increase to investments in affiliated companies, 121,000. So 121,000, and that's from recording their retained earnings less the dividend they paid. And we did those journal entries as part of step 3. That looks like it makes it balance. So we're probably okay, but we do want to finish scrolling through step 3, just make sure there's nothing else that might signal that there's an additional cash event. So let's see, I don't see anything on this one. And I don't see anything here. So that was the only adjustment that we made. That adjustment balanced it out. So once again, there's no additional cash flow for this account. It's already been taken care of. So I'm going to go back to my balance sheet and I'm going to make a note that there is no additional cash, or however you choose to abbreviate it. That's how I do it. Next, we've got our land, building, and equipment. And I know I did several things with those because I saw them as I was scrolling through to get ready for this investment in affiliated companies. A couple of them caught my eye. So I know we've done some things with that account. It looks like we started at 17.8 and we ended at 20,715,000. Let's see if we've already accounted for the changes or if there's some other cash event that maybe we don't know about yet. So this is land, building, and equipment, and it started at 17,800,000 and it ended at 20,715,000. The next step is to go through step number 3 and just see what we've done to our land and building account. So there's an increase to land and building. Very first thing, we purchased $2,767,000 of PP&E. And this was a purchase. Make these notes to myself so that, again, if I miss anything, I can go back and find it. Let's see. Oh, there's a decrease for $500,000, so that would be a credit. This is the sale. And that's all in this set. Let me scroll down. See dividends payable, bonds payable, common stock, additional paid in capital, investment in affiliated companies, nothing there. Securities available for sale, common stock retained earnings, bonds payable, treasury stock, no, treasury stock again. I don't see anything here. Oh, wait, there's one more. Increase to land, building, and equipment of $648,000. And that was the lease. 17.8 million plus 2,767,000 minus 500 plus 648. Does that give me the 20,715,000? If so, I'm done. If not, I need to dig in and figure out what else has gone on with cash. In this case, though, it does balance out, so there's no additional cash effect for land, building, and equipment. I've already accounted for all of it. No additional. Now, our next item is accumulated depreciation. And right off the bat, I'm just going to say, I don't care at all about depreciation. I don't even care. I made some notes in step 3 about depreciation. Great. But there is never any cash in depreciation. Ever, 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 ever. So I'm not even going to worry about it. I'm just going to make a note. There's no additional cash there because it's not a cash event. There's no cash in depreciation. The cash happens when I buy the asset. So it'd be part of this land, building, and equipment. It's not going to have anything to do with his accumulated depreciation account. So I'm just going to cross it off. So if you want to make a note to yourself that there's no additional cash, sometimes I'll just say this is done because I'm not going to do anything at all with it. I'm not even going to check it. So either way, you just need to make a note. Not going to do anything with depreciation. Next is intangible assets. We start at 73,000. We end at 568. Intangibles. We started at 73. We ended at 568. Now the question is, have we done anything with intangibles? And again, we're going to scroll through step 3 and see what we can find. So see, land, building, common stock, additional paid capital, available for sale, land, building, equipment, accumulated depreciation. I don't see anything on this page. Dividends payable, bonds, stock, additional paid in capital, investment in affiliate company. No, there's nothing there. Available for sale, common stock, retained earnings, bonds payable, treasury stock, no, down to treasury stock again, no. Net pension obligation, OCI, there's some land and building and the lease obligation, no, there's nothing there. So I have done nothing so far with intangible assets, at least as far as my step 3 equations go. But since I'm a good accountant, I am gonna look in one more place. You see, if I look at my balance sheet, I see an accumulated depreciation line, but I don't see an accumulated amortization line, which means that this intangible asset number is being reported net of its amortization. And that means that as part of doing this T account, I need to add in the amortization expense. And I have that right over here in my worksheet. We've got $5,000 that we've amortized away. And again, if I had seen accumulated amortization, I wouldn't worry about it. But since I don't have it as a separate account that I can ignore, because amortization never has cash effects, just like depreciation doesn't, then I do have to include it in my intangible assets. So I'm going to include that credit of $5,000, debit to amortization expense, credit to either the intangibles account or the accumulated amortization account. And I see, with everything I know, everything I've looked at, I have not accounted for everything going on in intangibles. It looks like there's a difference of about $500,000, and that's a problem. If I was working in a real company, I would go back and I would open up my accounting records and I would search through that account, T account or actual account, in the accounting software, and I would find intangibles. I'd find that 500,000 and I would see what the credit was. We can't do that here because I don't have the full set of equations. This is just a simple example. We're going to treat it as an additional purchase. because that's what makes the most sense. I can't capitalize R&D, so the only way I could have gotten that bump of 500,000 is if I debited intangibles and I paid somebody for it. And the most likely way I paid for it is with cash. Unless later on I see a bond or a note for 500,000 that I didn't know about, or I see some common stock that I would have given away for this 500,000, I'm going to assume that was cash paid. And I'm going to put that into my worksheets. The purchase of an intangible would be, let's see, operating, investing, financing. It's a long-term asset, so it would be investing. I'm going to add this 500,000 then to my worksheet for investing activities. Cash paid for, we'll call it a patent, but it's some kind of intangible asset. And I'm going to make a note right here, marketing green, but I know what happened to it. And if you want, you can put the 500,000 here and then link it down to the 500. That's up to you. But I just want to make sure I've got a note on the copy of the balance sheet I'm working on and a note in my worksheet. Now that wraps up our assets. We still need to talk about current liabilities, long-term liabilities, and equity. But I think, again, we need to take a bit of a break. So I will see you next time to continue our discussion of step 5. See you then. Thanks.